So today we're going to talk about buyers. We are in a different market. Last year, buyers were writing offers above asking price, right? Writing escalation clauses. Um, Agents were showing 20, 30, and sometimes 50 homes to get a buyer into a property. And the market's actually shifted. Okay. So the interest rates have shifted and working with buyers has shifted. And we're actually going back to a more normalized market. And who better to talk about how to get buyers off the fence than Mary Tan Addington and Tony. Mary is a leader within Thrive here. She is going to be an icon agent soon. So she's very close. And the one thing I love about Mary is, as a very experienced agent, she still likes to work with buyers. A lot of times you'll find agents that come into this business that they're like, oh, I don't like to work with buyers. I only want to take listings. And Mary likes to work with buyers, and I'll let her explain why. But what I'm going to do is I'm going to pass it over to them in a second. And for any of you that are new, I see some new people. These classes are every Tuesday or Wednesday from 12 to 1 Eastern Standard Time, or from 6 to 7 p.m. Eastern Standard Time on Wednesday. They're also going to be on tomorrow. And you guys have to stay present with what's happening with the market. And that's another reason why you should be here. Okay. So I'm going to pass it over to Mary. Working with buyers, overcoming buyers' objections. Thank you, Mary, and thank you, Tony.
Hey everyone. I consider myself a listing agent that specializes in buyers, right? And I consider that, and that's, I guess, how I see myself, is because a lot of the times, and I started my business with all buyers, is that the buyers lead to more buyers, more sellers, and on and on and on, right? And at the same time, one of my goals for all of my clients is to help them build the wealth. So I tend to work with more buyers because every time I go in front of a seller and I'm talking to them about, if they're like, oh, I want to sell my house, the very first question that comes out of my mouth is, do you really have to sell your house? Right? And that's a class for a different time, but I want to help them build their wealth, and I want to help them build their future. And with that being said, I love working with buyers. I love working with first-time home buyers. And every client, every escrow, every buyer is a new challenge, something new, something different, and I learn from them all the time. And so it's always, I take it as sharpening my blades and my negotiation skills, right? So with that being said, yes, I am on today with Mr. Campuzano with Excel Mortgage, and he will go over a few of the processes that we'll be talking about throughout the class. Now, since there's not many of you guys, we can actually have time to go back and forth. So let's make it into a conversation, right? Because I know all of you guys are working with buyers, and I know you guys have objections, and I think 12 minds, or however many we have, is better than one, right? So if you guys have objections, and as we're going through it, type them in, and we'll answer those objections. We'll come up with, hey, what's something that you can add to your script, and what's something that you can add to your presentation that's going to help you overcome those objections, right? So with that said, okay. Apparently my computer doesn't want to work with me. So this is basically what we're going to talk about, right? The lead generation. Tony likes to say this a lot, so I'm just going to go ahead and say it. Kissing frogs, not rocks, and I'll have them explain what that means. We're also going to go over buyer objections. So like I said, if you guys have buyer objections that you're either not being able to overcome, or having difficulty overcoming, or you're just like, how the heck do I respond to this? Type it in so that we can go ahead and answer them. The buyer consultations, and I'll go ahead and explain that to you. I do that with every single one of my buyers. I don't care if it is somebody I met at the open house. I don't care if it's a referral. I don't care if it's my own sister, right? and especially with your family, and again, a story for another time, especially with your family, do this. Okay. The pre-approval process, and Tony will actually go over all of that because he is the master when it comes to lending. And of course, the escrow process, right? Actually, that's where where the fun begins and where I sharpen my skills. So, any questions before we go further? No? No? Okay, cool. So lead generations, right? As a realtor, if you have no other escrows, if you have no deals in the work, if you have nothing in the pipeline, your two jobs and your only two jobs are lead generation and lead follow-up. Okay? Lead generation, lead follow-up. And lead generation is essentially finding the frogs. And I'm going to say this, but I'm going to have Mr. Campazano. Actually, Tony, do you want to chime in? So they don't look at me like I'm weird. I mean, I am a little bit weird, but
Sure. So the kissing frogs is really a euphemism for the concept that it's really a numbers game. The more conversations you have with, let's call it a qualified lead, the more the chances improve that that lead could turn into a capable buyer, which could lead to a check. So yeah, that's a funny euphemism I've used over the years to, tell newer agents that it's really just about kissing frogs, as some of them turn into princes, and so a prince representing an escrow and a check. So that's really what this concept is all about, is that we essentially have to go through a lot of leads to find one that will turn into an escrow. Fundamentally, and to close it up, it's we're looking for someone that has not only the desire to buy real estate, to sell real estate, but we need to find someone who also has the ability, and I can't stress that enough. I think it's just true, and I think the more we embrace that truth, the more effective we'll be. And I firsthand can assure everyone listening to this call that if some of you don't know this already, I knew Mary before she was an agent. I knew Mary before she had sold a single piece of real estate. In fact, she went rogue on me for a while. I was looking for her, and where she at her place of employ, and I came to find out, hey, she's gone. So where the heck did she go? And then she popped up her head a few weeks later, telling me, hey, guess what? I'm I joined so and so brokerage, and I'm in real estate now. And my first thought is, okay, well, that's the end of her. Boy, was I wrong. So my point is that she quickly embraced this philosophy that we're now espousing and trying to teach, is that Mary was absolutely sold on the idea that it's really numbers, and that you have to have as many conversations as you can. And she quickly realized that your more fruitful conversations are going to be with people that have desire and ability. All the desire in the world usually isn't going to overcome inability, and you're going to run into a lot of people with plenty of ability but no desire. So those are the frogs, people that have ability and desire. You Mary, and my philosophy is she kisses one cheek, I do the other, and try to find a prince. So in closing, there's toads. Toads are don't want to kiss any toads. Toads don't have either desire or they don't have ability. And then there's people that you shouldn't even be talking to at all. I call those rocks. So a rock may look like a frog, but yeah, not quite the same thing. So that's it.
so there you go. But as far as lead generations and the methods that you guys work the method that works for you, right? For me personally, I love open houses. So I do open houses. And from open houses, I was able to build the relationships. And now majority of my Majority of my clients are referrals, right? And I think Tanya can attest to this when we were looking at all of my transactions. And she's like, "Where did this come from? Referral. Where did that come from? Referral. Where did this come from? Referral. Where did that come from? Referral." She's like, "Are you seeing a trend?" Anywho, so work the method that works for you, right? If you guys are really great with your sphere of influence, you know what? Go take them out to lunch. Go take them out for coffee. Go visit them. Whatever, right? Work them, right? Send them birthday cards. Send them whatever. If open houses are what works for you, because that's what works for me to get new business, I do them every weekend. And I talk to everyone, right? Or door knocking, whatever works for you, go do it. And then once you do it, follow up, right? Follow up. Have I mentioned follow up?
And I have something.
But then, go ahead.
So, okay. So I want to go back to Mary. So Mary is one of those agents. She is just crushing it, right? Always super busy. And when we were looking at her, we do individual coaching sessions. We were looking at that. It was interesting because I thought the trend was going to be SOI because we already know that her sphere of influence is where she gets her business. But instead of seeing SOI, people that are in her immediate sphere, it was referral. And now it's always really good to visualize that because here is the lesson here. The lesson is just because somebody already bought a house, right? Bought a house from you, or just because somebody can't afford a house, right? Or just because somebody lives out of state does not mean they can't refer you business. It's the 6 degrees of separation. And that's what Mary does really well, is she nurtures her sphere of influence and her people. And Mary, you're talking about how you do it. Mary's very social, you guys. She loves to be with people. She loves to eat with people. She loves to have wine with people. But exactly what she's saying, just this week, and I'll stop here, I met 2 people that are already crushing it. And guess what? They're introverted. Guess what they don't want to do? They don't want to network, but guess what they want to do and what has worked for them? They want to door knock all day long. And that was an epiphany for me. They like talking to people to door knock to get to the other side, but they don't want to have wine with you like Mary does, right? They don't want to do those things. So Mary's exactly right. You got to find what works for you.
Wine and food after coffee. And if you guys know what this, I don't know if this one actually says it. It says, "I drink coffee for your protection." And today was definitely that. I flew back last night and then I'm like up early this morning. So I went to bed probably around 2 a.m, woke up at like 6 this morning to do this presentation. So drinking coffee for your protection. But so you got to go kiss the frogs, right? And to find your prince or princesses, for those guys that are out there, like, "Ooh, I don't want to kiss a prince." But so lead generate, guys, whatever it is that you guys, and it's not like doing something for the sake of doing something, right? It's actually doing an income producing activity. Right? So I do open houses, and my goal at the end of every open house is to have at least 1 lead, right? If you guys like to door knock, then your goal should be to have at least 1 lead, each day you go door knock. If you guys are, attacking your sphere or going after your sphere and calling them, well, you should at least have 1 referral from them, or they themselves want to buy, right? So your goal should always be, I should walk away from this activity, whatever activity it is that you're doing. I should walk away with at least 1 lead, right? Now that you have that lead, what do you do with it, right? So let's go to that. Let's talk about what we're actually here for today, getting buyers over the fence and actually being able to go get over their objections, right? As Tanya have mentioned, high interest rates. How many of you guys have heard that lately? Right? Everyone, "Oh my God, the interest rates are high. Interest rates are high." Well, you know what? In the last, actually, and Tanya, correct me if I'm wrong. I think we've closed, what, 9 transactions since January?
Yeah, I thought it was more close to 11, but between 9 and 11.
Okay, all I know was that I needed to close 15, and I've got 3 in escrow, and I've got 2 more to go to Icon. So, and I've got approximately a week and a half to get 2 more escrows open. So how in the heck am I doing any of that? Right? Well, easy. The easiest way to overcome buyer objections is to really find their why. Why did they go out to the open house? Why did they open up the door for you and talk to you? Why did they find out their why? Right? Well, we're, like the escrow that we just closed last week. They're like, we need a bigger place. We're in an apartment. We've got 2 very active boys. We just need more space, right? We need a place for them to be able to run around and play and be boys. And trust me, they're very energetic, active little boys. So if you find their why, everything else, overcoming their objections is easy, right? So I have a couple right now that we're in escrow. We should be closing next week. They're buying a place because their father's coming into the United States from another country, and they want to have a place of their own so that so that their father can feel comfortable in their space. And so how did I overcome the objections? Well, one of the things is we see the trend, right? And I'll let Tony talk about the trend in a little bit. And one of the things that, and this is a conversation that Tony and I regularly have is, okay, where are the interest rate? What are we seeing the trends? And we're like, look, we're seeing the trend. Next 8 to 10 months, we're highly likely going to see interest rate drop, right? And when it drops, guess what you get to do? You get to refinance, right? And they're like, but Mary, the prices are high right now. I'm like, yeah. And they're like, but the interest rates are also high right now. Yeah. And so my response back to them is, okay, but there isn't enough inventory. I don't know about where you guys are, but here in Southern California and even in Arizona, even in Phoenix, we still don't have enough inventory, right? And I'm like, imagine this. We don't have enough inventory. We don't have enough houses on the market, right? And I show it on the MLS. We don't have enough houses on the market. And even with the high interest rate, we still don't have enough houses on the market. So imagine, right? Supply and demand. Imagine what happens when the interest rate drops. What do you think is going to happen to home prices? And you know what I do? I let them answer that question, right? We all know the answer. Hey, when the interest rate drops again, what do you think is going to happen to home prices? And what do I also say? And I'll have Tony go over some of the other stuff. Is right now, because of the higher interest rates, the sellers are a lot more negotiable, right? Have you guys gone in and negotiated with sellers? I mean, this last seller, the one with 2 very active boys, we went in at list price, right? Right from the get-go, we got $15,000 back in seller's credit, right? And after inspections, I was able to get the additional $2,000. So we got them a total of $17,000 back in seller's credit. What did that do for the buyer? Well, since they were a VA buyer, they were actually able to walk in, get the keys to their home with 0 money out of pocket. We covered all of their closing costs. We covered their interest rate buy down. And I don't know what Tony did, but that really didn't cost too much for them. And we got them extra years of home warranty, and we prepaid several months of their HOAs. They literally got back all of their earnest money deposit. Were we able to do that in 2021, guys? Or even 2020? Like, was that even a question? Right? No question. So when they talk to you about interest rates, bullet point, right? Hey, you can refinance, and you don't have to go into a bidding war with anyone else, right? You can sit back on your couch, sip on your wine, and yes, I do like wine. Sip on your wine and do the refinance. Tony and I will take care of that for you guys too. Number two, the sellers are a lot more negotiable. You can refinance out of a high rate. You cannot refinance yourself out of a high price, right? So why not take advantage of it? Why not take advantage of the softening market? And then when the interest rate drops, probably in the next 8 to 10 months, you can refinance, right? Well, now's not the right time. And I'll actually let Tony talk about the other two, now not being the right time and not having enough funds.
Oh, that's my cue. Okay. um, so the objection from a potential buyer stating that it's not the right time, my advice, my experience is that it's very helpful to, I think, number one, always validate a buyer. Maybe they have a concern that they're not properly voicing, properly explaining, and getting a buyer to expound and maybe try to explain is a good idea. A lot of times it's like a psychological effect that when we discuss a problem we have thought about or we feel, if we say it out in the open, sometimes upon closer scrutiny, now that it's out in the open and more consideration, it's easier to see that maybe it's really unfounded, maybe it doesn't make a lot of sense. So I always encourage people to give them space to talk, to say, well, why isn't it the right time? Often you'll find people have, it's this fear or false perceptions, or because people that have influence over a buyer, their brother-in-law, their coworker, their friends, other relatives are saying it's not the right time. So that's the first thing I would say. Very important to get someone to talk about why they feel it's not the right time, and giving them, I guess, a safe space, a safe environment to say that. How do you do that? Well, I would say to a buyer, Bob and Mary, I hear this from time to time. I can understand where you're coming from. I'm curious, what makes you think that? Would you be willing to share? Well, my brother-in-law, the plumber, yeah, to which I usually respond, yeah, I have a brother-in-law too. They say interesting things. So that's my advice, guys, is getting first and foremost someone to talk about, well, why do they feel it's not the right time? So that's step one. Step two is you have to be, well scripted and have your response ready, but that implies that that you've rehearsed, that you've read through these things, that you understand, because really all it is, like I said, it's mostly helping people overcome, I think, a psychological block. So I hope that's not too convoluted or too esoteric, but to me it's really that simple. It comes down to getting people to talk about what is it, and then helping them overcome the objection. So what's the objection usually? Well, they think prices are going to come down. So I'll go through this quickly. So if it were me and I'm talking to Bob and Mary, and they're like, well, we don't know that it's the right time because my brother-in-law says the market's going to come down more. I understand, Bob and Mary. A lot of people feel that way. So I'm curious, why do you think the market's going to come down more? And it's layer after layer after layer, getting them to try to espouse what's behind that. What are you grounding that on? And a lot of times what I find with that is that they're simply saying, well, we don't want to buy something it's going to be worth less. And then if they have trouble, I'll say, well, Bob, Mary, so make sure I understand you. And is that really your concern, that I may buy something, pay a particular price for an asset that later could be worth less than I paid for it? Is that ultimately one of your primary concerns? Yeah. So yeah, I understand. A lot of who wants that. A lot of us have that. I noticed that people do that with cars all the time. Have you noticed that people buy new cars, even though it's a well-known and documented fact that depreciation is going to occur, arguably the moment a car's driven off a lot? And I pause and let people ponder that. Yeah. So why do you think people continue to do that? I wonder. Oh, well, because then it's a conversation. Well, because the car's still useful. I mean, it still gets them from point A to point B. Yeah, yeah, exactly right. So, when you're buying a primary residence, sure, it's an unwelcome prospect that maybe the home would be worth less. But the truth is, thankfully, the home doesn't shrink, or the roof doesn't disappear or anything like that. But so if it's a primary residence, are there other benefits having your own primary residence would have other than, some market value that's really just kind of conceptual? Does it give you the proximity to your kid's school? Does it give you the peace of mind that your landlord isn't going to displace you or keep raising your rent? Does it, give you the I think very important tax benefits? So are all those benefits more important to you than the perceived value that someone might be willing to pay for your property? So that's the kind of discussion as an example of not the right time. And again, the formula is always the same. I always like to get people to talk about, why do you feel that way? Let's get to the bottom of it, and giving them, again, validation. Yes, a lot of people feel that way. No, you're not weird for thinking that. So that's the formula, getting them to espouse the details, to share more details, giving them a space to feel validated. But then you have to be ready to overcome the objection. You have to be ready to help them see things from a different perspective that maybe wasn't the correct one. So any questions on that? Okay, I'm gonna move on. So funds, not having the funds. So that to me is pretty simple. Sometimes buyers, particularly new buyers, it's amazing to me still in this day and age how many people I run across that think you need 20% to buy a home, with a conventional loan or whatever. I want to do a quick poll. Okay, so you can show with your hand. You don't have to speak, but can this is a participation presentation. So could you good folks with your hand tell me what the minimum what the minimum down payment is for a conventional loan? Let's see some hands. Okay, 5%, 5%. We have the gentleman here. 10% from Dee Dee. Miss Watkins doesn't know. Miss Jackson is smiling. Ooh, Maria Price has 3. Let's see who else. Okay, I can't see other people. They don't have camera on. Okay, so all of those who said
in the chat, they say 3%. Angela says 3%. Michelle says 3.5%. Deidre says 3%.
Excellent. So the 3% people are right. Now, however, thank you for all those that participated. Now, 3% is when the loan is a conventional, conforming, very important, conforming loan balance. If the loan balance is above conforming, and that number is can change within the county that you live, but the national conforming average number is 726,200. So if you're going to borrow under that, you only need 3%, provided the credit scores are there and income and whatever. So my point being that a lot of people don't know that still. They think, oh, if I'm going to use a conventional loan, I have to have 20% down. Most people understand that FHA is less down, but one myth that a lot of people have about FHA that I constantly hear is they think, oh, well, that's for first-time buyers, and FHA is not for first-time buyers exclusively. First-time buyers can use it, but so that's one thing to overcome funds is a lot of people don't understand how little it takes. So then the only other topic here is I remind people that, hey, you know what? The down payment can come from other sources that are acceptable. For example, can your mom Can your mom and dad or family gift you the money needed for the down payment and closing costs? The answer is yes, of course. Can you use money in your 401k or 403b or retirement plan if you so chose? Yes, you could. If you meet certain criteria, could you apply and qualify for down payment assistance products? I think that's a whole nother big discussion. That isn't always I think, a viable solution, because then you run into the issue of competition when you're making offers. In essence, that's how I would overcome the funds thing, is helping a buyer to understand that, well, it takes a lot less money than maybe you realize. There's different sources you can use for that money. And yes, sometimes if you're eligible and you live in the right county or whatever, right city, you could have assistance from other sources. Any questions on that?
I have questions. So can you give us, can you talk to us a little bit about interest rates? I'm not interest rates, credit. So a lot of people feel like they can't buy homes because they don't have enough down, but there's a lot of people that think because of their credit, they cannot qualify, and so they never try. Talk to us a little bit about like minimum credit scores, and then how long does it take one to improve their credit to be able to buy?
Okay, folks, I'll do my best. Those are complicated questions. So credit. So here's the truth as I see it, guys. So what is the minimum? These are important things to know, really important, in my opinion. What's the minimum credit score for a conventional loan? Anybody know? Put it in your chat. Okay, somebody wrote 640. Jessica, 620. Jessica Jackson, thank you. Who agrees with Jessica? Rolanda does, excellent. Dee Dee says 640, and Miss Anderson says she agrees. Okay, so the answer is 620 is the minimum credit score for a conventional loan. So here's a question then, everyone. Let's say you have a buyer that shows up and goes, oh, it's only 3%, and the price point I'm looking at is 550. Well, great, that's well under that conforming limit. I have my 3%. I have a 620 credit score. Who, you can do a show of hands, who thinks that person would be approved? Raise your hand if you think that person would be approved. Nobody, huh? Very few. No one. So the question is, let's say you run into someone, a lead, who says, I have a 620 credit score. I have my 3% down for conventional loan. Let's go. Can that person get approved? So the short answer, guys, is, again, this is just generically speaking, I'm going to say to you, I'm about 98% convinced that person would not get an approval. Would not. So you might ask yourself, well, wait, didn't you just say 620 is a minimum credit score? Yes, everyone, yes, but here's the way it works. Lending is like building a stool. Imagine a stool at a minimum needs 3 legs. Leg number 1 is credit. Leg number 2 is capacity. Leg number 3 is collateral. So what does that mean? So leg number 1 is about your credit score. So the lower your credit score, the thinner that leg is. Leg number 2 then is income. So how thick is that leg? So in other words, the bank's measuring debt ratio. How much of your gross income is used up on paying the house payment and all your other debt? So leg number 2 would have to be really thick to overcome the low credit score. So a very low debt ratio, a lot of surplus income. And then leg number 3 is, the collateral. So in other words, okay, we have your 3% down. Do you have anything else? Is there other money in a brokerage account? Do you have an IRA, a 401k with, $75,000 in it? So what the risk assessment, and by the way, this is all done through basically AI software. It's not a person. It's not like, oh, well, this lender's opinion. It doesn't really work that way. It's all Fannie Mae, Freddie Mac, DULP, as you may have heard. And what is that? That's basically like a risk assessment tool that, you know, is basically mixed in with AI to determine if someone is a good risk. So I can assure you, after years and years of doing this, that if someone shows up with only the minimum 620 and only the minimum down, no other assets, and a high debt ratio, you can pretty much bet that's never going to be approved. Put it this way, I've seen people in the scenario we're discussing that have a 674 credit score that won't get approved. So why then do
approved, excuse me, approved for conventional or approved for anything?
Conventional? Okay, now, so then the solution, you know, what happens with someone like that? Then the potential solution is, okay, well, now we need to look at an FHA product. So for a conventional loan, 620 is the minimum, but 620 doesn't assure the approval. That's just the frustrating and truthful reality. That's why I always like to teach people that you got to really go deeper and think of the three legs of a stool. A stool has to have three legs, not one, to be functional. So we got to find out, okay, credit, income, and assets, basically. What does that look like? So FHA is certainly a possibility at 620. And then it depends. Why is a credit score 620? Are there a lot of current collections? Are there a lot of current missed payments? That could be problematic. So in other words, everyone, it's not just a pass fail thing with credit. You have to really go deeper and find out, well, why is a person at 620? Is a person at 620 simply because they don't have a lot of credit, or their credit is stagnated and they don't, there's nothing to report? So eventually the credit score model is punishing them for that. Well, those people have a much better chance than someone who's got a lot of current collections or late payments as of just a few months ago. Those kind of people, the AI software, the LPDU software, is unlikely to give those people an approval. These are important things to know. That's how the credit works. Now, the next question. So moving on. So how long does it take somebody to improve credit? That's a tough one to say. And here's why. It depends on, well, why was their credit damaged to begin with? If someone, again, has a lot of current recent collections, what's current and recent? Less than 2 years. If someone has a lot of current or recent late payments, and that are not fraudulent or not erroneous, in my opinion, I'm not a credit remediation specialist, but from what I can tell, it takes about 24 months to undo the damage of like late payments and a recent collection. So after 24 months, the effect of those things starts reducing quite a bit. So I think it would take at least 24 months of timely and responsible use of credit to get to a stage where it's more likely you're assuring that everything else being in place, an approval is possible. But are there things someone can do in the short term to collapse those 24 months into less time? Sure. Like what? Well, there's the dispute process. So that's convoluted and complicated, but so according to the Fair Credit Reporting Act, there's like 14 pieces of data that a creditor has to be able to present in order to get onto the credit report. A lot of them don't, but consumers don't exercise their rights because they don't know. So if you challenge someone on your credit report, hey, I need to see, I need to see the data you used to get on here. And if they don't respond in time, the repositories are inclined to remove that, but they can come back on later. So that's one thing, is okay, maybe disputing things that for certain shouldn't be there. That could help, especially if it's a collection. Another thing that could help is adding credit for someone whose credit score is a little lower, damaged because they just don't know how to use credit enough or response, but don't have enough. So if they have relatives, a spouse, family members that would add them on as a authorized user to, let's say, their Macy's account. So if I have like my spouse had a Macy's account or has a Macy's account for like 9 years, she hardly ever uses it. It's just sitting there. She maybe only uses it on the holidays, and right now it's got a zero balance and it's got 9 years of perfect payment history. If I said to her, hey, let's get me added as an authorized user, all that 9-year history automatically, if Macy says yes, by the way, that history will be transferred onto my credit profile and automatically give me a boost. Those are things that can be done in the short term. So, however, I think the benchmark, again, in my opinion, to where you more safely Remember, guys, it's not just about improving the credit score. Can someone with a 660 credit score qualify for a conventional loan with 3% down? Chances are slim. If all they have is 3% down, no other assets, chances are quite slim. So that's why I'm saying to you that. Why? Well, because maybe the 660 implies that there hasn't been at least a 24-month period from the last derogatory payments or latest collection. So these things get, again, quite convoluted, quite complicated. And it's really just based on, again, what the AI and the DU and LP software does. Now, this is a very confusing and frustrating part for agents, because especially agents that have been around a while, many will argue with me and say, wait a minute, I had a buyer qualify with a 622 credit score. And my response is going to be, I have too. I've seen that too. But you know what happens? DU and LP have these dials and switches in their control room that they don't consult any of us before they make these changes and adjustments. And I can assure you, as night turns into day, that the powers that be make changes to these switches without really telling anyone, because they're 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 not accountable to any of us. They make these changes in the way that they tighten credit quality. Sometimes they loosen it, sometimes they tighten it. Lately, it's been a tightening trend. And what used to be approvable is no longer. So yes, I can assure you there's much vexation, because I have seen people qualify for a conventional loan with minimum down at 620, but that's not the case now. It could be the case later again, but not the way the knobs and adjustments are being made by Fannie Mae, Freddie Mac on credit risk. So something important to understand, guys, is that, as I get it, people say, well, and we always have to be careful of historical application to the modern, to present day. It just often doesn't work. So that was a long answer to Tanya's question. Any questions on that? Somebody wrote, so an agent would want to even, so as an agent, would you want to even ask what their credit score is, or just send them straight to a lender? Great question, Maria. My advice is always to ask. Well, why? Do you want to know if you're kissing a frog, a toad, or a rock? Because if that person has very damaged credit, again, guys, this is like my philosophy, and my approach, just so you guys who don't know me, the way I think is pretty simple. I like to think lead to check. What's the shortest distance? That's how I operate. It's as simple as that. That's my pragmatism. Lead to check. How can we shorten that time frame? That's what I like to do. So if you don't ask this question, what's going to happen is you're going to potentially invest more time and effort into someone who's a toad or a rock. Now, that doesn't mean we're mean to people, or you're disrespectful or rude or inconsiderate. That's not what it's about. It's about you have limited time, you have limited resources, you have a limited marketing budget. So what do you want to do? Do you want to work with people that could be a check or not? So yes, the answer is I would always ask. So how would you ask? I would just say to people, hey Bob, or hey Mary, hey John, hey whatever, do you have any idea what your credit score looks like? In this day and age, everyone, most people do. I would just ask it just like that. Any idea what your credit scores are like? And here's the things you're often going to hear. Oh, well, Credit Karma said, oh, or my bank told me, oh, my Discover card says. So what do you do with that information? Use it as a benchmark. So sometimes people might even ask, well, I don't know, is Credit Karma reliable? Is it true? I say it this way. So imagine you're in a helicopter, Credit Karma will drop you off in the right city, but not at the right address. So in other words, that's a way of saying, well, you're in the ballpark, but it's not entirely reliable. And we can talk about, that's another topic, but the answer is absolutely, I would always ask. And then I would ask further. So by the way, how do you earn your income? What do you do? oh, I'm, you know, I do this, I do that, or, oh, I'm in between jobs, or, oh, well, I just started my own business. Now, these are important things for you to know, to tell you, for you to discern, is this a frog that I need to pursue, or is this now turning into a toad? Or is this a complete rock? Someone else wrote, like Tony says, a husband may have a lower credit score than a wife or vice versa. True. That's true. And in conventional lending, FHA lending, VA lending, USDA lending, jumbo lending, everyone, there truly isn't true credit blending. There is for the risk assessment, but not for pricing, not for really final decision making. So in other words, if you have a spouse with a 620 credit score and another spouse with an 800 credit score, guess which credit score lenders use to price that loan? It's always going to be the lowest. Exactly. Maria wrote, would that affect anything, or would they go with the highest score? No, it's generally 99 out of 100, unless it's like non-QM loans, everyone, or non-agency loans. What does agency mean? Agency means Fannie Mae, Freddie Mac, HUD, VA. If it's one of those loans, for sure, 101% of the time, they're going to go with the lowest representative score. So you could have 4 borrowers on an application, 4 of them, and if 3 of them have 800 credit scores and one of them has a 620 credit score, all of those agencies are going to say, okay, the credit score representing this file is 620.
So
Why, Maria? Why? That's a great question. Why do the agencies do that? Because that's the best way I know how to say it. The best way I understand it is it's just comes down to risk assessment, a conservative risk assessment. So they're saying, all right, well, we're going to responsibly, I guess, in their mind, assess and determine whether or not we should take on the risk of giving these people a big wad of money based on who's the weakest link in this chain. Now, to reiterate, it's a great question, Maria, but to reiterate something, risk assessment. So what happens to the guy or the buyer, the person who's got a 620 credit score and only 3% down, no other assets? We already know, I told you, 98% of the time on a conventional loan, that person is not going to get an approval. Now, what if this person says, hey, but you know what? My brother can co-sign with me, or actually my spouse, and my spouse has an 800 credit score. Well, guess what? The chances just went way up because the artificial intelligence model is saying, okay, well, then our risk is being spread out amongst more people. So that's a positive thing to know too. But if it's a singular person, 620 credit score, minimum down, no other assets, highly unlikely. Go ahead, please, Tanya, your question.
My question is if you get somebody to co-sign for you, right?
Yes.
And it's a primary residence, but they already live in a primary residence. How does that work? Are they
Great question. Fannie Mae, the agencies, Fannie Mae, Freddie Mac, FHA, not VA, but these other agencies allow what's called a non-occupant cosigner. So then, you know, the relationship has to be established. That can get a little murky, and you got to be careful with that. You can't just grab someone off the street and go, hey, you know, can you co-sign for me? So the question then fundamentally is, though, can someone who owns a home, so let's say I want to buy a house, I don't quite have enough credit or income, and my brother has his home and he lives, you know, across town or the next county over, whatever, in another state. Can my brother go on the loan with me to spread out that risk that we just talked about before? The answer is yes. The answer is yes, that is allowed. So how? Well, it depends what my brother's income is. Is my brother's income my income, and our combined debt, his debt and my debt, and the proposed payment I want to take on this home? After those calculations are made, if I'm still under the debt ratio tolerances, if we are still under the debt ratio tolerances, then absolutely that could work. But remember, when you add a cosigner, you're not only adding your cosigner's income, you're also bringing your cosigner's debt into this equation.
You know what? I actually have something that just happened to me. So after my divorce, I went on my brother's, and it did help my credit because my former spouse forgot to pay the mortgage payment in the house that he was living in, I wasn't living in, and that did get removed. But what happened is when they bought their new house, they started putting a ton on their credit, and now it helped my credit initially, but then it hurt my credit because now they had a ton of debt. So be careful with that. And so my question is for Mary. Mary, in this case, so two questions. How would you do a handoff to Tony in terms of like asking about credit and like, hey, I'm going to pass you on to my lender. Tell me where your credit is. I'd like to ask you, what would your script be? And then Tony, you talked about a bunch of solutions to get buyers off the fence. Co-signer, a gift, getting your credit improved, and then I'd like you guys to touch on the rate buy down. Passing it to you, Mary.
So we can overcome, or I've overcome a lot of buyers' objections by literally sitting down with them face to face, sitting down with them and doing a buyer consultation. Because then we go through all of it, right? Hey, what's going on, what's happening, and if I can. And I always try to bring all of my buyers to my office, and or if they're not close enough to my office, then I will take it to the nearest EXP or whatever office I can do. I would always try to bring it into office, but if that's not possible for you guys, a neutral ground, right? Starbucks, something like that, somewhere where you can still talk private, but still be able to meet face to face. So in that buyer consultation, or if I'm at an open house and I'm talking to them right face to face, I would start asking all these questions. And then, if I realize that, hey, you know what, they are actually a good candidate, or there is a possibility of them getting approved, then I always ask them, hey, well, one of the other questions I ask is, are you pre-approved? And if they say yes, I'm like, fantastic, who are you pre-approved with? And if they can't tell you the name of their loan officer, they're probably lying to you. So what I always say, hey, you know what? Why don't we do this? Why don't I have my loan officer call you? He's amazing. He's phenomenal, right? And he can go over all of this process with you. So that way, when we actually start looking for a home and we start going and seeing homes, we can be 100% assured that you can actually buy that home, that you can actually get the keys to that home. And, I don't ever ask them, hey, can my loan officer call you? No, it's like, hey, when's a good time for my loan officer to call you? Right? Because if you give them a yes or no questions, they're always going to give you a no answer, or 99% of the time, they'll always give you a no answer. But if you tell them what time is good for you, right? What time, what day is good for you? When are you available for a call? And then they'll tell you, oh yeah, I'm available such and such time. Fantastic. I'll have them give you a call then. Right? And sometimes, if there's like, oh, well, Tuesday or Wednesday, and I'm here on a Sunday, I'm like, why don't I also do this? Let me go ahead and give you his name and phone number. So just in case you do have time in between, before now and when he calls, you can definitely give him a call too. Right? But most of the time, I always ask them for a time to call and things like that. But during the buyer consultation, if I can, and I have brought Tony in on some of the buyer consultations, I bring him in. I'm like, he's actually right here. Why don't we open up his laptop and let's take a look, right? Because my goal is always to, how do I get there faster, right? How do I get paid faster? And I do that by, I kid you not, folks, when working with a buyer, I cannot emphasize the absolute need for a buyer consultation. That would save you time, that would save you headache, and that sets you apart from 99% of the other agents. Because I guarantee you, they're gonna, agents meet clients and they're like, oh, well, let's go see homes, right? So by setting a buyer consultation, you're setting yourself apart from all the other agents, number one. And number two, you're really getting to know who they are and what they want and what their needs are and what their wants are. So when they start coming up with these objections, you already know their pain points that you can go and start pressing on them, right? So, oh, well, the interest rates are too high. I totally agree, or not agree, but I understand, right? I understand that the interest rates are too high, but wouldn't you want to get out of that house, right? get room for your kids to be able to go play, or you know, if I'm dealing with an older couple and you know, they're in a 2-story house and they're like, you know, we want a 1-story house because they fell. Hey, how soon, you know, do you want to continue having that be a trip hazard, right? So you want to keep pressing on their pain points, and is pain versus pleasure, right? So if you can keep pointing out their pain points to get them over that hurdle and that fence, is a lot easier. And you do that by having a buyer consultation.
And every one of you has if you don't have it, the buyer scripts, text me and say, hey, I need the buyer scripts. And Mary, for the sake of time, we have about 4 more minutes. Can you guys talk about rate buy downs and how are they being used today? How do you talk about a rate buy down for someone who is thinking about buying, or you're getting ready to write an offer?
So for those that are concerned, I always say, well, you know, there is the option of a temporary buy down, right? A 2-1 buy down. And they're like, well, what's that? I'm like, well, the first 2 years you get 2% less. The second, or you pay 2% less in interest rate. The second year, you know, you pay 1% less. The caveat to that is that buy down has to come from a seller or someone else other than yourself. And when I'm not talking gift funds from their family or anything like that, it actually needs to come from a separate source. So either it needs to come from a seller or it needs to come from the agent. But it needs to come from anyone else other than the borrower. I know, because we just ran into that issue very fast just recently. So I always tell them, and I'll let Tony actually explain to them about the 2-1 buy down.
And by the way, Tony and Mary did a training, and I have a full training that goes into detail with slides and everything about the rate buy down. But go ahead, Tony. So I just want to let them know we have a more in-depth training.
Very simply, guys, very simply stated, the temporary buy down, the best way to understand it is it's just a subsidy. It's a subsidy. The seller is agreeing to subsidize the mortgage payment for the buyer for 2 years. It can be done for 1 year. Some banks allow 3 years. Obviously, the longer the term, the more money it would take, the bigger concession needed. So it's a pretty significant savings, very attractive. Mary and I like to tell people, look, let's pursue this. It's a fantastic benefit. It'll bridge you to when inevitably, hopefully rates drop within that period, and then we can drop you into a lower rate. But that's really what I can say about it. It's a 30-year fixed loan. It's not. So I really think it's misnamed. I've seen this time after time. People go, well, wait, where my rate was at, 6.5. How come it doesn't say 4.5? It's not going to say 4.5 anywhere in the disclosures. It's not going to say 5.5. It's not going to say any of that, guys. Why? Because it's misnamed. It's not a rate buy down. It's a payment subsidy. So please understand that, because I think that language is extremely important so that your buyers are not never confused. So again, all it is the seller agreeing to deposit money into a fund, an account the bank is going to hold, and the bank from that account is going to pull money for 24 months to complete the payment due from the buyer. It's really all it is. The interest rate never moves. It's a 30-year fixed rate. You'll see that in the disclosures. You will not see anything that says -2, -1%. That's not going to be in anywhere in the disclosures. Why does the industry call it? I don't know. I don't know what genius decided to say, oh, look, your rate's being bought down. It is the equivalent of that, but it's not doing that. It's subsidizing your payment.
So this one, thank you so much, goes back to Mary. So Mary, when you negotiate, right, you're a buyer, and you're negotiating, the buyer's agent is negotiating for their buyer, we have to remember that you are negotiating for the seller to pay for the rate buy down, right? So when you go in, I'm going to ask you, Mary, how would you advise a buyer who is interest rate sensitive, when they were writing an offer? Would you say, hey, we're going to ask for 15,000 off or 10,000 off, and somebody wants to go put an offer in, they're interest rate sensitive. How would you advise them? Obviously, it's case by case, but because you are actually negotiating something, what would be your best advice in general for something like that?
Understand what the seller is wanting. At the end of the day, understand what the seller is wanting, right? Because every deal I negotiate, I always try to do a win-win deal, right? Where both sides walk away at least feeling, maybe not the greatest about the deal, but yeah, they're like, you know what, that was fair, right? So I'll give you a few examples.
And by the way, it's 11:01, so I just want to give you a
okay, I'll make it quick. So there's a couple of ways. So if the listing has been on the market for a while, like it was with the, my VA buyer that we negotiated $17,000 on, that we went in at list. It was on the market for a while. The seller needed to sell. They wanted to sell quick. Fantastic. So I'm going to take that advantage and be like, okay, you guys want to sell quick? Let's get it done, right? I have a pre-approved buyer ready to go. I have another client, right? The house has been on the market for a month. And I'm like, all right, well, let's offer a list price and ask for $10,000 back, or ask for $15,000 back, or whatever the case may be. Or what if the property just came on the market and, and they really like it? Well, then you go back and talk to the seller. You look at the comps, and if they are priced properly and correctly, then you tell the buyer, well, we can go ahead and do this, but we're going to have to offer more and ask for some back. Right? So if we offer, and we did this with one of our other clients, hey, if the property is listed at 620, I'm going to give you 635, but I want $15,000 back in closing costs. Right? So that's how you would negotiate, is figure out what it is that the seller's wanting. Is it a quick sale? Is it what is it? How long has it been on the market? Talk to the listing agent, get as much information, and you guys pick up the phone and call. Don't text. Don't do any of that. Pick up the phone and call. Hey, listing agent, what are your sellers looking for? What is it that they have? And things like that. And then based on that, take what they told you and then, let your buyer decide, hey, we have X, Y, and Z options available. Where would you like me to go after? And one of the other things I also tell my clients is that, how I negotiate solely depends on you. And they look at me like, what? Well, I can go in and negotiate the way I negotiate on on anything I do for myself, which is that I'm okay walking away. So if you're okay walking away, then I'm going to go in and negotiate the way I negotiate. If you really love this property, then we're going to go and negotiate. That's going to work best for not only for you to get the keys, but also for us to get into that escrow. So find out the why from both sides. And that's how you can negotiate better for your clients.
Yeah. And the key thing that she said is calling the listing agent before you put an offer and talk to them. Hey, this is Mary, just calling because I'm about to write an offer on your property. We'd like to win this deal. What is important to your seller? Because then they want a 45-day escrow, or they want a 30-day escrow, or they need to do a rent back. Because if you put that offer in without having any of that information, guess what happens? Now you're risking counter offers or a complete denial. Now you just lost time for someone else to come in and put a higher offer, even if you have the strongest buyer and they have really strong financing. If you're not communicating and you don't know what they want, you are risking losing that offer or that house. All right. So for the sake of time, Tony and Mary, can they reach out to you if they have separate questions?
Of course.
Okay, perfect.
Actually, let me get that up for you guys. Sorry, I picked that off of the screen for a little bit. So for Tony,
Perfect.
If you guys are in California, if you're in Arizona, there's his contact information. And for me, what did I do with it? There's my contact information. And if you guys have any referrals out in California and Arizona, I would appreciate that too. I'm trying to reach icon status, so help a girl out here, okay?
Love it. All right, you guys, that was wonderful. Thank you. Very informative. You guys, I'm going to have this up. If you guys want to come on tomorrow, I'm sure there's going to be different questions for the two of them. We'll be on from 6 to 7 tomorrow Eastern Standard Time. Okay, everyone. Thank you so much, you guys. Bye-bye.